Hey traders, welcome back to another Sunday video where we take a look at the week ahead and we talk about trading setups, trades that I am currently in, as well as take a look at things like the commitment of traders data and seasonality data, anything that could really help us to spot some opportunities as we go into the new week. In this video, we're going to be covering all sorts of stuff. I'm going to be looking at commodities today. I'm going to be looking at some indices, going to be talking a little bit about currencies as well. And we've got to talk about the recent move, especially in gold and oil, and kind of my game plan going forward. So I want to invite you, if you're new, make sure to subscribe, hit that thumbs up button on the video. It would really support my channel. And I appreciate it very much if you like these free videos. And let's go ahead and jump right in. So first of all, I just want to say this is a very big week. We have a lot of news both from the US and abroad. We have the ADP number for NFP this week on Wednesday. We have the Bank of Canada and their decisions. We also have Jerome Powell speaking, JOLTS job openings. You've got the ECB going at it too. So what are they going to do next? And then of course we have the big one on Friday, NFP. So jobs numbers coming in hot. Here's a bit of a market overview as we get started. The S&P 500 roared into the close here on Friday. Same thing with the Dow and the NASDAQ. The euro also found a bit of a bid, and the dollar really took a nosedive here towards the end of the week. Gold also really ran up higher, and we're also going to take a look at oil, which did very well. And real quick, I'll show you what kind of changed at the end of the week. So towards the end of the week, it became a little bit more apparent with some weak PMI numbers that rate cuts could actually kind of be on the table as early as June. Now seeing a 52.8% chance that that is the case. Let's also go look at the July meeting as well. You can see that there is now the market is fully expecting rate cuts to happen by this time. So a bit of a change in the narrative, and that's why, guys, we saw gold jump, right? Gold, I've said this many times on the channel, it really wants to see rate cuts. Rate cuts would be a super bullish scenario for gold, and I am currently long gold, so let's see if this can continue to ride out the storm. So while we're on the topic of gold, I will go ahead and show you guys where I currently stand with it. You guys who have been watching the show and channel all the time, and if you're obviously in the Discord VIP room where I shared this trade signal, I went long on gold here, basically thinking that we could see a continuation of this range at the very least. But I liked the way price action was moving, and with geopolitical tensions high, the possibility of rate cuts on the horizon, I think that overall we'll look back in coming years and say that this gold price is actually going to look cheap. This is my personal opinion, and I could be totally wrong about this, but I think in years to come, you'll look at gold around the low 2000s and say, wow, that's a bargain compared to where it could go, if we do continue to see rate cut expectations increase and we start to see, geopolitical stuff still being on the horizon, and they don't stop printing dollars, but they can't, generate as much gold, right? So the point is, I do have a long-term bullish outlook on gold. So I went long on a lower time frame technical pattern. This is why I'm a trader. This is why, I do invest, but most of what I do in terms of market participation is active trading, active investing. And so I went long gold, and it didn't go anywhere initially, but we launched here towards the end of the week on those weaker than expected PMI numbers. So for people who say, oh, fundamentals don't matter, this is a move based almost exclusively on rate cut expectations coming sooner due to the PMI numbers that came out very weak. There's also some other numbers that were a little bit lackluster, and any fumble in the economy while inflation is still hot gets us into the sweet spot for gold, which is a good old thing called stagflation, which if you are newer to my channel, I've been talking about this a lot recently. It's when growth kind of slows, but inflation stays sticky. If that scenario happens, gold flies, right? Because inflation going up sometimes is confusing to people why that pushes gold prices down. If growth is up and inflation is up, the Fed can cut rates because it won't kill the economy. But if the economy is weak and inflation is rising, they can't do too much in terms of keeping interest rate high. They have to cut rates to make sure that people still have jobs, right? So long story short, stagflation is the super bullish scenario for gold, and it does look like there may be a bit of a case for it as we go into the rest of 2024. If the economy starts to slow, but inflation is still stubborn, boom, gold flies high. And that's part of the reason why I'm long. And I want to add context to this. I've been clear about my trade from the beginning and also my game plan. My trade is in profit. Let me show you my position. So I'm trading on WeBull, which will be linked down below in the description. Also, I should mention, I mentioned the signals group. If you guys want to join VIP, click the link down below in the description. This is not your traditional signal service. You guys know me. If you watch my channel, I'm not here blowing smoke. If you want to see real trades, real action, live broker statements, you know what I always was so triggered by when I would see other people doing signals is that they would never actually show any live accounts. You guys will see it all the time. If you want to join the signals room, the link is down below in the description. I am trading my real hard-earned money in the room every day. If you want to join and get those alerts, use the link down below in the description, and the promo code is, ready? YTVIP. Put that in at checkout. You'll get a discount on the membership that you choose. So there's your plug for VIP. Anyways, I did trail my stop. You can see I'm up $1,000, or I'm sorry, $2,000 on this trade. I'm up $1,000 on my Bitcoin trade, but $2,400, let's call it $2,400 on gold. And you know, as much as that is great money, and I should not complain at all, it's still a small trade on my account. What I would like is to add to the position, and I illustrated this from the beginning. This was a bit of a choppy daily chart. What I'm looking for is a breakout and a retest to actually add to the trade and get a bit more of a full-size position. Speaking of full-size position, really quick, we'll take a look at the oil trade, which is flying high. We're up just around $8,000, and I believe there was some Middle Eastern conflict that went on over the weekend. So, you know, we'll see where oil prices go from there, but quite an interesting move to say the least. Now we'll move on and take a quick look at the commitment of traders data, which came out very interesting this week, and loving it for my oil position. Look at this. Institutional money added to their position. We covered this last week, but oil was a big bid last week. It got another bid from institutional money. Let's break this down. So oil traders who are following along with me in this oil campaign I've been on, they increased long contracts substantially, 30,400 something, and they decreased shorts. That's a very net bullish week. Not only that, the overall contracts, when taking a look at the number of longs versus the number of shorts here, gives us a 73% ratio long to short in terms of institutional positioning. And by the way, guys, we can also take a look at gold, which was not as impressive. I should mention silver as well as gold both saw very mild, well, silver more so than gold, but gold saw very mild selling by institutional money. I wouldn't call this anything substantial. Usually we mark it a little bit more dark. The algorithm will color this a little bit darker if it, you know, is a higher percentage one way or the other. So silver and the NASDAQ, look at this, NASDAQ, significant selling on the NASDAQ week over week from institutional money. So if you're an index trader, keep an eye on that. Feel free to pause the video if you want to look at all the other COT data in terms of the latest filing. We've got that here. And of course, when you're on your own, if you use the Edgefinder, you can select any symbol you want. You can get the push notifications, all sorts of stuff if you do in fact have the Edgefinder. Here's an update on the top setups algorithm. This is, of course, the Edgefinder's system, which basically takes in all the data. We have a really simple process with the Edgefinder. The Edgefinder, well, it's not very simple, but it's the output is simplified for you. The Edgefinder takes into account a ton of market data. It pulls in from so many different sources. It has a ton of different scripts that basically pull information, sort it easily for us. Then what the system does is it visualizes it easier for traders who want to look at it, all these left-hand side things. You can go look at it. And then finally, it actually punches in through its algorithm all that data and says, how is inflation impacting so-and-so asset, right? So inflation and the trend and seasonal trends and retail positioning and COT. The algorithm is very transparent on the screen. It looks at all the different factors. It gives a bullish or bearish reading based on the data it's got, and then punches out an output score for us to use. So I use this every single week, and this is my current kind of watch list for the week. I am already in a long position on gold. I'm already in a long position on oil. I'm riding those and letting those ones run. The interesting thing is that for currency traders out there, we got some yen bullishness here, euro yen, pound yen, dollar yen. So I'll keep an eye on that, and the pound pairs continue to be very overall kind of uniformly bullish on the Edgefinder as we go into this week. Also, I should mention we are kicking off a sale on the Edgefinder this week. we're doing 20% off. If you've been thinking about getting a copy of the Edgefinder, I will leave a link down below in the description. If you use code YTVIP, same one for VIP room, if you use that promo code and the link down below in the description, you can get 20% off your copy of an Edgefinder. So if you've been thinking about it, take advantage, and there you go. Enjoy it. So I mentioned some weaker than expected numbers out of the United States in terms of economic reads. And this has me a little bit concerned, to be honest, about my USD bullish position. I have a short on the euro dollar and UUP, which is an ETF that tracks the dollar. I have a long position on that. So I'm bullish on the dollar. However, I'm decreasingly bullish, if that makes sense. We've seen this pullback. The buyers have not stepped in, and also notably, we've had like PMI data that was kind of weak, and now interest rate cut expectations are being pulled forward. So we'll see. My signal to go ahead and cut this trade is that if we do break through support here this week, it's going to take me out of the dollar, and I will move on from that. But we're in this tentative upward trend, but the bulls need to make a move soon. Otherwise, we're going to kind of lose that steam and potentially roll over if we do start to see rate cut expectations rise, which again is a bull case for gold, but a very bearish case for the dollar index. Here's a look at the S&P 500, which rallied hard on the idea that rate cuts are coming. But I do want to caution people. I made a tweet about this, or a X post. I tweeted about how basically, everybody in the trading space right now seems to think that trading indices is easy, right? Because they just go up, right? And while that is true, if you look at a very long-term and gradual approach to indices, that is true. They typically do go up. What is difficult, this is a weekly chart. If, right around this area, you were just like, oh yeah, indices only go up and they're very easy to trade, and you approach that in 2022, you would have lost so much money. I can tell you from experience, I am generally more bullish than I am bearish in the indices, and 2022 was a very rough year for me in my trading performance. So I want to point out that when you get a stretched market like this and everybody is so pounding their chest about how great of a trader is, there's an old expression, and that is everybody is a genius in a bull market, right? And so be very careful out there as you watch the indices. I am bullish on this stuff myself, but I recognize that markets don't move in one direction forever. They have corrective periods. And so I am looking for a corrective period on the S&P, the NASDAQ, and the Dow. So I will say this. So from a 4-hour chart perspective, if you're trading the shorter term, if you're momentum trading, I don't see anything wrong with that as long as you have defined risk and you're quickly out of that. But I do want to add context to the daily chart. In the last, X number of years, many years, they did a study. I found this, and I don't have it in front of me, but, you can find this for yourself or just take my word for it, but you probably shouldn't do that. You should go look it up. In terms of the average year, there is historically about 5% pullbacks on the S&P 500 per year. We haven't had one. We haven't had one in a long time now. It's been a minute since we've really seen, here's this pullback over here on the daily chart. What is that? That's 2.7%, right? You had this pullback, that's 1.8. You had this pullback, that's 1.6. The point is, we have not had a substantial pullback. Now this one, here's 5%, and then here was another 6%, and then here was another 6.5%. My point is, from peak to trough here, that was a 10% drop. It's very normal for stocks to have 5 to 10% correction periods. And when we have these extended moves, I look elsewhere. So I've been trading a lot of commodities. You guys saw earlier, I'm making pretty good money right now, not even touching the S&P 500 or the NASDAQ, which is my favorite thing to trade. I'll be very clear. I really like trading stock indices, but I have to do so on my own terms when price is pulling back. If I get caught chasing in here, very quickly you could get caught in a 5 to 10% drawdown, which could erase much of these gains, as stock market bulls seem to be getting really loud right now. So I would just caution traders who are watching this. Same story for the NASDAQ. Again, this idea that rate cuts are going to save the day is also expecting the market to be perfect, right? In the sense that we can't have anything go wrong. If there's any escalation in geopolitics, if there's any, hey, the economy is actually sliding faster than we thought, or the consumer is weaker than we thought, those scenarios really crash the story down. So be very careful watching these. I am overall a bull on the indices, but waiting for a healthy pullback before the risk looks appetizing to me personally. So that's my thought currently on the indices going forward. And to add more context, I pulled up something on the Edgefinder. This is the AAII Investor Sentiment Survey. I absolutely love this tool. It allows us to look at a bunch of traders that input their current kind of outlook on the market. And what we can see is that we saw a tick higher here. Only 21.3% of traders are bearish. This is a low in recent times here. This is a weekly reported survey, and you can see bulls are getting really, really confident. I use this as a contrarian signal because when you start to get very, very crowded sides on a trade, just something to be aware of. The put-call ratio is also looking kind of interesting. When this gets more extreme, that tells you that traders are buying a lot more calls than they're buying puts. And of course, if you know calls and puts, calls are bullish bets, puts are bearish bets in the stock market. So also something to keep an eye on. Bitcoin ripped the last few weeks, and I do have a bullish position on this. I've been trading something that, well, is my first time ever, IBIT. This is a Bitcoin ETF that is now available on the New York Stock Exchange. So I can trade Bitcoin by buying an ETF. And you might be saying, Nick, why would you want to do that? Don't you want to own the coins? Well, let me tell you this. I'm personally not really a huge crypto bull. And I don't really get my tinfoil hat too much on when it comes to cryptocurrency in terms of like, oh, you got to own the coins. To me, at the end of the day, if we live in a world where, your only real money is Bitcoin, we've got bigger problems than whether or not we can access that. I feel similarly to like gold and silver ETFs, right? I don't mind buying and trading and owning those because, yes, they hold the gold and silver for you. You don't own it physically yourself. However, in a world where you need to own it physically yourself, like a fallout, gold and silver, are they really going to have that much value? Is Bitcoin really going to have that much value if the whole world is apocalyptic? So in my opinion, I don't look at these things as, the future of money. I'm not that kind of guy. But when it comes to Bitcoin, it's a sentiment vehicle to me. I trade it, right? In terms of where we're at, I think the market is pretty risk on right now, pretty optimistic in terms of where things are going. And so I'll hold on to this one. I'm planning to kind of trail a stop on it, to be honest. So I picked it up back over, actually, hold on, let me show you, IBIT. Picked it up a total of about 32% down from here. So I'm up like 48% from my entry. So it's been a nice run, but my plan is to go ahead and trail a stop and just let this thing, take me out if it reverses. But I am not by any means kind of like a crypto super believer in that regard. Here's a current look at all of my current positions: gold, US oil, the dollar, SLV, IBIT, and also some options plays as well. So I did a video yesterday. If you guys care about options, the video did terrible. I don't think that my audience really cares too much about options. To be honest, a very small group does. So I'm not sure what I'm going to do with it. I don't know if I'm going to make full-blown videos about it, or maybe I'll just kind of include it towards the end of these types of videos. But anyways, got some options positions doing well, have several active trades, some momentum trades that are going well as well. So this is WeBull, by the way. If you guys would like to trade with WeBull, I'll leave a link down below in the description. And because I mentioned it earlier, here's a quick look at what the VIP room looks like if you've been thinking about joining. It's quite the service. We have several traders, myself, Frank, Ivan. We share all of our trades and ideas in full context, full details. We do write-ups on each trade. It is the real deal. We're not here telling you to copy and paste our trades and make a bunch of money. That's not what we're here to do. But if you're a serious trader looking for a serious trading room to be a part of, as well as understand ideas behind trades being taken, again on live capital, no nonsense, consider joining us. All the information for the Edgefinder VIP room will be linked down below in the description. And thank you guys very much for watching today's video. If you did enjoy, hit that thumbs up button. Have a great week ahead. Thanks, guys.